This is Tom Aspray with the Viper Report Market Wrap video for the week ending May 16th. Well, the past few weeks we've been talking about the new highs in the S&P AD line that, based on my work, projects new highs for the S&P and the Qs. A week ago, not too many people agree with that forecast, but now it seems like a number of top Wall Street analysts and well-known ones are changing their tune. Let's look at some of the recent headlines the past week. Goldman Sachs raised their S&P targets, moving it back up. Same with Sanjeev Sharma, and share his S&P target for 2025. Moved it up. Ed Yardeni, who in my view is one of the best, he had gotten cautious. Interestingly enough, he also got cautious at the end of October of 2023, which I could certainly remember and understand, since I was starting to look at things differently as well, and moved it back up to 6,500. Look how different this is from a month ago. Wall Street's most bullish firm heading into 2025 just slashed its S&P 500 forecast. Oops. The take home from this is that you really, shouldn't pay much attention to what the Wall Street firms are saying. In my view, they're almost always late. And also in terms of big hedge funds. A little later I'll show you that, pull up a chart that shows you that in the past couple of months the hedge funds have been most heavily invested in healthcare stocks, which have gone below the sub-basement. I often get questions. New students. I had a new student a couple years ago who, after he, decided on doing some coursework, he said, "Well, I just shorted the QQQ," and I said, "Why would you do that?" And he said, "Well, this billionaire hedge fund guy, who's worth, 30x billion." He just, he established a short position in that. So I figured, he had to be right. And I explained to him that really was the wrong way to approach on it, because even if he, established a short position, it was such a fraction of his net worth that when he was wrong, it wouldn't make a difference. So let's look at some charts. We have the weekly chart of the S&P 500. You can see a nice strong close. This red line is the monthly pivot resistance for the S&P, which was at 558.97. The R2 is at 62.11, which would be a new high. Continued strong, almost scary strong move higher in the AD line here, really far above its moving average. But its moving average, has gone from flat to, just to sharply rising. Sometimes that can last for quite a while. So, here with another similar peak in November of 24, we did have about a 5-week correction. Don't think we're going to see that much. If you look at, the daily chart over here, you can kind of move this over. This is what I recommend and what I teach to my students is that, if somebody asks me what I think of a certain stock, I tell them to go first to the weekly chart. Oftentimes I'll get charts and say like, "Wow, do you think this is a buy?" And then, I'll look at the weekly chart and point out why it isn't. And it's a pretty helpful and can be illuminating decision. So, we'll stretch this out a little bit. You can see this is a daily chart of the SPY, bumping it up against its daily Stark bands. So yeah, it makes a setback pretty likely with this resistance. At 600, there's a gap between about 577.04, down to 570. Could be filled, but certainly no signs of a top in the daily AD line. Before you could get a top there, you'd need to see a drop back below the moving average and time for the moving average to roll over and start declining. So still looks like a very bullish environment. A very strong close for the New York Composite, up 3.2%. You can see it's surpassed that little high from March, and back to 20,000, and the prior highs looks likely. Stocks only AD line, it had been lagging, often is the case, because the all AD line has bond funds in it, etc. So it's the one I've actually been studying since the 80s, because back then I didn't have access to this data, and I don't think anyone else did either. But you can see we've broken the downtrend here, moved up rather sharply, so we'll be looking and would expect it to make a new all-time high, in the next month or so. Down below here we have the all AD line broken out to a new high now, confirming the price action. So, this is projecting that the NYSE will move above, the all-time high here, which was at, 20,315. 20,000, or 332, excuse me. Looking at both the S&P and the NYSE all, a comparison look at the S&P 500 AD line and the NYSE AD line reveals that the S&P AD line has been leading prices higher since the growth correction in 2022, and of course it broke out to a new high already, just joined by the NYSE all. What I call the 90% chart shows that 77.2% of the S&P stocks were higher on Friday, 58, little over 58 on the S&P 1500, and 55% on the Qs. But it's also important. You can see on Wednesday's drop, the QQQ stocks held up much better. Less than 10% were lower, as opposed to over 40% on the QQQ and about 40 on the S&P. If you look at the daily charts, you can see the SPY has made it well above its 100-day moving average, flat at 574, with the 20-day rising sharply, so that suggests it is a positive environment for doing new buying, as long as you look at the price levels. And you can see the R2 is at 620.21. That's for May. Down below we have S&P 500 AD line staged the breakout first here, and long trading range. We talked about it in past videos. You can find them on YouTube, and that it was slightly lower here, but the key support was back in these levels, and it held, keeping the trend outlook from my perspective as still bullish. Stocks only, also finally surged back above its moving average, then broke its downtrend. NYSE all AD line was right on the money here. So in teaching this, you kind of look at this as pink line as the first resistance. So you cross above that. If let's say you're going to have a maximum position of, say, 400 shares, that's where you put 100 in. You break this other downtrend here, you add another 100 or more, and then once you get the market leading signal here, when it moves to new highs, that's when you get more fully committed, and it requires monitoring the price levels to the overall risk in the position is well managed. It's another good week for growth. It does suggest that this was a false break of the uptrend. The MACDs have just flipping back to positive. You have the potential that, of course, we could get, a further divergence down the road, but for right now, growth is looking good. For the Qs, certainly it's the place to be. You can see the weekly chart. We regained, the yearly pivot here. You can see that, going back into 23, this red line is the pivot, stayed above the yearly pivot all along, stayed above the yearly pivot all of 24, dropped below it and spent like 1, 2, 3, 4, 5, 6, 7, 8 weeks below the yearly pivot. Now back to positive. AD line also looks very strong here, and the RS, weekly is about ready to break out. That would also be a positive sign for growth over value. Looking at the daily chart, we're getting a little extended here. So 521.93 was the high. 529.64 is the monthly R2. That wouldn't take long early in the week. You can see the AD line. Also, this is the time right in here. Nice little consolidation. Got to pull back to the 20-day EMA. Great time to buy the Qs, or in our case, the TQQQs. Still looks very strong, so no real signs of a top. And RS broke out, pulled back slightly. So, the way this normally works out, expect that the RS to turn back up by the middle of next week and make a new high and show really bullish upward zigzag pattern. New high, new low is barely positive, I could say, but not impressive. What's going wrong? Well, you can see we got a slight little uptrend. It often does lag, so at some point in the next, by the middle of June, I'd like to see the number of new highs get strongly above this peak here. Currently 143, 80 new lows, so it's staying low. That's a good idea. For the NYSE Composite, similar pattern, 85 new highs, 11 new lows. A gradual uptrend here, but we have this peak here, I think was right 160. And so long as we don't see an increase in the new lows, that will stay a moderate positive, though many will be pointing to this this divergence, if it continues in the months ahead, about why they're not buying. In fact, those of you who follow the markets on an ongoing basis, and also listen to my videos, probably realize that it seems like Wall Street's primary job a lot of the time is why not to encourage buying. Seems contrary to their profits of their companies, but that's the way the evidence is often spinned. The VIX and the VXN continue to fall. We talked about it right in here that it looked like it had topped out, which is bullish for stocks. No signs of a turn here. So, like what typically happens is the moving average is declining. So that gives you some room that even if we get a sharp setback, it's not going to turn the VIX or the VXN into a new uptrend, which would be a reason not to be in stocks. Let's move on to the T&J watch list review. Continues to improve. 67.2 of the ETFs above their quarterly pivots, and 43 new weekly buy signals. Growth is still acting stronger. Value's not doing too bad. 80 above their quarterly pivots, 72 here. 81% positive weekly, 90% positive on the growth, and about the same. So, obviously long leveraged are the ones that are really strong. We have a daily chart here of the S&P XL. It's been on a buy mode, since April 30th. Still looking strong. Upside targets, at 163.50 and then 195.15. A breakdown. Lots of improvement here. You can see that when we've been talking about XLI moved from 75 to 100%. XLY, we're still looking for a pullback here to buy this, but it also suggests a bottoming pattern here. XLV, as I mentioned, not the sector to be in. And we look at the RS charts a little bit, you'll see it's been plunging for, the last couple of months, and it still looks weak. 91.7, quite strong in the XLK, that's tech. Also in the banks. So XLC is doing well. A pullback in the utilities, but the chart doesn't look that bad to me. So, and in XLRE. So, XLK was up 8% for the week, 7.5% for XLY. XLI was up 5.6, all of which beat the SPY. And XLC was up 4.6. XLE was up 3.7. XLE remains a conundrum. You see we popped up to 50%, but we get down to the breakdown, it's lagging a bunch of stuff. And if you get down here, you can see that lots of weekly, new weekly signals: XLY, XLB, XLC, QQQ, SPY, IWM, SWMH, SMH, the semis, VIKIE, that's the insurance one I like. It's a pretty conservative play. ITB, not in it, but looking, and TQQQ, which is going gangbusters, has in the last 10 weeks or 2 weeks. So interesting comparison in today's report. Subscribers should note that this one above, that's what it is, the current. This was April 17th. You can see all this was red because that was after the correction lows have been making. So what we saw happen was all this red would gradually turn to green, and when it did, it would tell you which ETFs could be in, you should be looking at. So typically they get a 4-hour positive, then a daily, then a 3-day, and then a weekly. So interesting comparison. And back to the RS, you can see that consumer discretionary, we finally completed this kind of base formation. Consumer staples, price wise it looks okay. RS has been dropping sharply, so we'll be watching the next rebound. Financial, a little disappointing based on the RS. We finally overcame some heavy price resistance last week, so that's good. Technology going through the roof. I encourage your questions about these videos. One I have gotten is kind of looking at this. So this is from the ETF report showing you all the ETFs that gave new weekly buy signals. Some of you have wondered why some of these, like ITB, are still highlighted in red. Well, that's because it closed at 95.42, but the quarterly pivot is 99.99. So they're red because they are still below their quarterly pivots, even though the weekly DTS is positive. So that's one of those things from the tables. I know quite a few of you look at those quite extensively, and I want you to understand them as much as possible. So let's page down here, looking into, spread this out a little bit. You can see energy is still in a downtrend. Materials, starting to look better. APT, lots of green there. Industrials, gangbusters, it's been in a strong uptrend. What we typically look at is some of these individually. So like, LMT or UPS. Of course, it's been, UPS is closing down a bunch of operations. So, that might be included as a positive. Consumer discretionary, some interesting stuff there. I mentioned last week Tesla had flipped to positive. Now McDonald's daily and auto parts here, and 75%. That's kind of bottoming action we want to see. Consumer staples, you pointed out. Healthcare, it's just I'll be writing something about the Bank of America hedge fund survey, and that's the hedge fund favorite stock group. So financial, lagging a little bit, but some, Bank of America gave a new weekly buy, added Goldman Sachs and Morgan Stanley. JP Morgan is still green. It was one of the leaders, and what is a holding for the stocks newsletter. Let's see, what else? So communications, 83, still looks strong. New signals from Meta last week, and that's always a interesting stock to follow. Utilities, 33%. So if you think that this is just a pullback in a downtrend, you'll be looking at for some of these DTS ones to flip back to positive. So looking at the staples, for example, you see new daily buys in Costco, Walmart. Of course, they're in the middle of sort of the tariff controversy with the president attacking Walmart over the weekend. You want to look at the individual charts of those, and you can see this is a chart of Costco, a weekly chart. I like to go back at least a couple of years. This is generally a pretty bullish formation. Why? Okay, you you weren't sure after that big week up if the bottom had been in place, but now you can see every time it's lower during the week, it's well supported. You have these tails, so like last week's low was 983, closed at 1026, and edging higher, volume increased, relative performance still shows a positive trend. It's pulled back, OBV is positive, so this 1068, the yearly R1 is the next likely target, and if you complete this trading range, you look at 1076, 980 on the downside, that gives you a couple hundred points up from the breakout level. That puts you above 1200. Looking at Walmart, you can show it's got this long tail. If you aren't familiar with looking at the tails on candle formations, that's a sign when you see this in a weekly chart that, okay, it got down as low as 91.89 on those earning comments during the week, but it closed at 98. So that drop was viewed by, those with the deeper pockets as a buying opportunity. You can see the low, as I mentioned, 91.89, just got down below the 20-week EMA, which is at 92.22. So good thing to look for. Also strong volume, so lower volume, high volume with that kind of up 1.6% close. OBV looks strong. These are our current ETF holdings in the Viper ETF report, all acting pretty well. You can see that utilities, kind of pulled back to support here. It closed strong. It was up 1.5% on Friday. So for a utility ETF, that's not too bad. This is the insurance one we've been talking about. A slow mover. We aren't in ITA. Keep looking for an opportunity, a pullback. That's the defense. TQQ has been rocketing to the upside. Just find a place to take some partial profits. Gold, we got stopped out of. We've had a really great run for the past couple of years, so we're watching this. This is probably a pullback within the uptrend, but I'd like to see some more evidence. And here are the current holdings from the stock report. We've been taking some profits at higher levels. We exited part of Uber last week for a pretty nice profit. And on the Viper report, we'll have the current holdings and closed positions from last week up by Monday. So JPM, Para just recently put out, hasn't done much. AIG, a lot of them closed the week pretty strong. Fastenal finally looks like it's ready to move. GVA, also a construction company. So if you want to subscribe and get specific recommendations and updates when the market moves sharply higher or sharply lower, go to the Viper report and you can sign up $34.95 for a month. And hope you'll give us a look. And as always, send me your questions at tom@viperreport.com.